From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Friday. I'm Juliette Sarli. Well, what a week. We had some really big company earnings this week, the likes of CBA, which was a beat. We heard from Telstra, we heard from the stock exchange operator, the ASX today. And all in all, as markets react to what we've seen from reporting season so far and data out of the US, hinting that we might start to see those cuts in September, it has been a good session. And in fact, the market's up for a sixth day in a row. So you take last Friday's gains and add it to green days every day this week. And we have seen a gain of 1.3% on the CBO 200, while the ASX 200 is also tracking higher by more than 1% today. 95.7,960 is where we sit at the end of the trading week as we head, of course, into match off. Just in terms of course, what we've seen today with some of these momentum is the right word. A sixth day of gains, as I mentioned. But we also heard from the RBA Governor, Michelle Bullock, today. Now, she was testifying in Canberra to the House Economics Committee. We've heard from her in the last couple of weeks twice, or three times in fact, because she of course spoke after the RBA decided to leave rates on hold. Then she spoke in her hometown of Armidale a week ago, but speaking again today and just again doubling down that they do not see the need to cut interest rates anytime soon. Inflation is still too high, and put simply, we're consuming more than we are producing. So even though she acknowledged that some households are having it very tough at the moment, there is still too much stubborn inflationary pressure out there, and that is why they do not see the need for a rate cut anytime soon. I spoke to Deutsche Bank's Phil O'Donoghue yesterday as well, after we had that jobs number showing that even though unemployment ticked up to 4.2%, you've still got a lot of jobs out there being created, nearly 58,000 in the month of July versus expectations of 20,000. And yeehaw, let's look ahead to Jackson Hole. Of course, the Fed's annual symposium, always very big in Wyoming, and that is happening next week. That is going to be the key centerpiece in terms of what we see for economic movement next week. I was having a great chat with Steve Gopelin from Skander FX, earlier, and he was saying that's going to be the key for any sort of dollar moves that we see. But when you think about the movement in the yen back to where we were nearly 2 weeks ago, there's been quite a lot of movement and I guess unwind of the carry trade, if that makes sense. And today, Tokyo's Nikkei average closed up 3.6%. So we have, of course, seen a lot of momentum being added back into that market after that Black Monday nearly 2 weeks ago. Let's have a look at our market. As I mentioned, a sixth day of gains, kicking it off with the miners. Now, we do have iron ore posting a weekly loss, and that is as we continue to see that weakness in the commodity amidst concerns over China. But today you did see a comeback in a lot of these iron ore players that have been heavily hit hard over the last couple of sessions. So the likes of Fortescue adding 2.7% to $17.30. Taking a look at the banks, we heard a quarterly update today from NAB, and its share price rose by 1.6% to $36.52. I mentioned CommBank came through this week with its results. It was a profit, a fall rather in profit, but it was better than what the market was looking for. Their dividend still looks strong. A lot of people saying, look, is CBA a growth stock? Because it continues to rise, up 2.3%, $137.53, which I think is either a record or very close to records. The REITs, of course, today we had a lot of those reporting. Goodman Group among them, and it was down by 1.3%, while the others tracked higher. Now, Scentre Group reports next week, and we are going to be speaking to the CEO. Charter Hall also up by 1.6% today. Dexus rising 1%, and Mirvac up 0.8%. When it comes to some of the corporate stories, I mentioned the NAB posting third quarter profit trading update, citing a further increase in arrears due to the economic environment, particularly persistent inflationary measures. Shares rose 1.6%. Now, I spoke to the CEO of Domain. This was a really interesting chat you can find online. We've already published it on ausbiz.com.au. It fell 3% today to $3. Now, it did report a rise in full year profit, but it had a significant item loss of $6.1 million. And when you look at Domain versus its peers today, REA was up by about 2%. The stock exchange operator coming under pressure today after its numbers, and also as it, of course, pointed to the fact that it is being sued by ASIC. And GQG Partners down 2.3%. It did, though, report a surge in funds under management in the first half of the year, thanks to what it said was a stellar performance across its suite of equity funds and low fees. And, of course, the stock of the day was GQG Partners. We heard from Luke Winchester from Merriweather Capital and Andrew Page from strawman.com.
So that's a buy before on the program. The shares have done really well, but it's only been backed by this operational performance, which continues quite strongly. Even today, still trades on 13, 14 times earnings. You're not paying a steep price. My only worry with it is trees don't grow to the sky, particularly in equity strategies. $150 billion is a lot of money to manage in I know they do some other stuff, but primarily equity strategies. There's only sort of 50 to 100 companies that are in their investable universe that have the size and liquidity required for those sorts of that fund level and portfolio.
It's going to attract a bunch of funds under management, and that's really the key metric that you want to look at here. And it's hard to argue with the direction that that's going. 14 doesn't seem too onerous. As a PE, the only thing to bear in mind is that funds under management and fund flows can be volatile. It's going to be a direct reflection of what's happening on markets.
Let's get to our Friday guest. Shane Oliver from AMP joins me. Happy Friday to you, Shane. Share markets continuing their recovery somewhat. What a good week.
It certainly has been. When I last looked, we were up more than 2%. So good recovery. If you look at most markets around the world, they've seen something like a 2/3 recovery of the losses they saw going into the lows early last week. So it is a pretty good rebound. I think investors have sort of regained their confidence that maybe we're going to have Goldilocks after all, not a recession. There's certainly been more good news on inflation coming out of the US, another central bank joining the crowd and cutting interest rates. That's New Zealand, and profit results in the US, although we're near the end of their results now. And of course in Australia have been sort of okay. So all of those things have combined to sort of push share markets higher.
Yeah, as I read in your note, I love this line. The good news is that the drumbeat of global rate cuts continues, with nearly a third of global central banks now cutting. You know who's not cutting, and we heard that again today, is Governor Michelle Bullock.
That's right. That does strike me as a little bit surprising that, having sworn off time-based guidance after the experience 2 years ago or 2.5 years ago, the Reserve Bank seems to be back providing that. If you look at the way the comments are being interpreted, even though they're hedged with, things could change. And of course, based on what we know now, those things are ignored. When you look at the headlines, it's RBA rules out rate cuts this year, which is fairly strident. Now, of course, there are some differences. Of course, the Reserve Bank would cop a lot less flack if they had an earlier than expected rate cut as opposed to a rate hike. But you'd have to say, as things stand, the Reserve Bank doesn't appear to be in any hurry. I think to get a rate cut by year end, you'd probably have to see a run of softer than expected economic data, quite a lot softer, or some sort of financial shock. So it is possible that you could get that, but I think the most likely scenario remains early next year before we get a cut.
What about our friends in New Zealand, though? Were you surprised that they cut, because it was even ahead of their own forecasts?
Well, it was certainly ahead of their own forecast. We've got to bear this in mind that only back in May, 3 months ago, the Reserve Bank of New Zealand was talking about possible rate hikes earlier this year after a run of 3 monthly higher than expected inflation numbers in the US. Some were talking about maybe the Fed hiking again. And certainly the Fed was starting to sound a lot more cautious about things after that experience. So these central banks have changed their tunes fairly quickly. I must admit I wasn't that surprised. It seemed like the RBNZ had been changing their tune quite quickly. They have seen weaker than expected economic growth. And of course, I think the money markets had priced in a cut, even though economists were more split on it. So it didn't really surprise me that they cut. What did surprise me was the extent to which they're projecting rate cuts. Well, they're 3.9%, I think 4.9% by year end and 3.8% by the end of next year. So they're projecting or they're tracking a quite significant amount of cuts going forward from here. So they've certainly changed their tune. I think the RBNZ has become worried that they'll end up with growth being too weak. And they do have a habit historically over many decades now of swinging from one extreme to the other.
Indeed. All right. Well, we know markets are always forward looking. We've got Jackson Hole next week. What else should we be looking out for? I guess also tell us how important it is, the symposium in Wyoming.
Well, it's important. It's been going on for a long time now. I think it started in the late 70s. It is a gathering of central bankers. The European equivalent is in Sintra. And I think Powell was there. And often they have panels where their comments can be quite significant. I remember Jackson Hole first came prominence in my mind back in, I think, 2010 when Bernanke sort of flagged I think it was QE2 coming. And there's been a few other events where it's been significant. It's hard to see Powell. He's going to be speaking 10 a.m. Friday morning US time, which is in the evening in Australia or night time in Australia. So our markets will have closed by the end of next week before we hear from Powell. But it's hard to see him providing anything different from what they've been saying, and that is that they are gaining more confidence, that they have to look on both sides of their mandate, not just inflation, but also employment, and basically paving the way, I think, for what will be a cut in September. Now, the question is, the money market still has, I think it was about 75% probability of a 50 basis point cut. So that is still a possibility. And so that's what's going to be looked at here. You know, how worried he is getting about the job situation in the US and therefore how quickly he might want to move. I have a feeling they'll probably sort of say, well, things are okay. So far, the data looks like Goldilocks, notwithstanding the fact that unemployment rose. So therefore, they're probably not going to be rushing into big cuts at this stage. But that's probably going to be the focus, whether they go beyond talking about a 25 to talking about something which is bigger, like a 50.
Yeah, Goldilocks, I heard that a lot this week. Now, just going back to our market and I guess what we've seen with company reporting season, early days, but what is the sort of report card you're giving so far?
Well, so far it's been okay. You know, we've got slightly less companies than normal, surprising on the upside, 38% versus, I think, 48%. So that's a bit of a downer. By the same token, there's also less companies surprising on the downside. And if you look at that chart there, you can see some good news there. 60% of companies reporting profits up on a year ago and 55% reporting dividends up on a year ago. So that's good news. And obviously, those numbers are much better than what we were seeing back in the February reporting season for the December half. So that's good news. The only thing to note is that when you look at that chart there, for the most recent observation, we've only got about a third of companies, whereas all the other observations relate to the end of the reporting season. It is early days yet. We have only seen about a third report, and it's often the case that the good companies go first. Badder results tend to come later. It's also the case that the bulk of the weakness the market expects in company profits for the last financial year, and that's where we're getting the results through for, relate to the energy sector. So, you know, most companies would still be reporting profits up on a year ago. So, but so far so good. You know, time will tell. Looks to me like when you look in some of the sectors, you know, the banks have said that profits are down at CBA, but not as much as expected. Arrears are up, but from a low base. I think that was the message from both NAB and CBA. And when you look at retail, things are tough, but maybe not as tough as feared, which is why I think consumer discretionary stocks have done pretty well this week.
Yeah, speaking of consumer discretionary, have you read that Jane Birkin book behind you? She's was a fascinating lady.
She was. You might be looking at Monkey Diaries.
You've got one next to Robert Redford called Jane Birkin. I want to borrow it.
I have. I think it's called Jane Birkin, Monkey Diaries.
Oh, right.
That was a diary she kept from when she was a young girl up until the Serge Gainsborough period. Unfortunately, there is a follow-on from this because she kept the diary going right up until whenever, and there was a follow-up, but I couldn't get it in English language. version. I couldn't find it anywhere on Amazon or somewhere, but it'd be nice to get the follow-up after the surge period. But she was fascinating. I've watched many of her films. The story around, what was it called, Slogan, the film that they met on in 1969, I thought was amazing. They became the couple of the year. Out of that film came the hit song Je t'aime, which is an amazing song for the era. So it's always worth listening to. But she did some amazing stuff. And I think the French loved her because she was like an English person that fitted in well. She looked more French than English, to be honest with you. And she always had this mashed up accent, this mashed up French accent, which she admitted she should have tried to improve, but never got around to it. And so they loved her. And of course, I think they had almost like a state funeral when she passed away. I think it was last year. The wife of the president was there. Quite a big event. So, I was quite sad to hear. Unfortunately, I only became a fan of Jane Birkin when she was 65 and she came to Australia in 2012. And that's where I discovered all this stuff and got a lot of her albums and so on and the whole surge thing. But I missed out on that on her tour. I should have gone and seen it, but I didn't realise it was on until after she'd left.
Yeah. Oh, Jane Birkin, well, a Birkin bag, I should say, is something I would love one day. You are probably one of the most well-read economists in the world, Shane. We love it. Thank you so much for joining us. Have a good weekend. You get markets, economics books with Shane Oliver from AMP. All right, having a look at the leaders and laggards today. Zip. Now, this was really interesting because it is partnering with a US firm in terms of payments. So it was the front runner today, up 13%. Ordinate, we're going to be speaking to them next week. Its shares rose 7%. We also saw some good gains in the likes of Pilbara Minerals. Stuart Roberts from Stocks Down Under has something interesting to say on Pilbara. You can find that on ausbiz.com.au. Having a look at the laggards today. And Domain. Now, I spoke to the CEO, also very interesting, particularly what they're seeing in terms of some growth moderating in listings as we kickstart full year 25. Amcor reported as well, shares down 2.9%, Strike Energy, Cochlear, which came out yesterday, and Downer EDI to the small end of town today. Appen was a winner, up 21%, flipping it over to some of the laggards, and that was mainly all in the material space. Oh, I don't know what happened to silver mines, but 38% drop today. That is a big fall when you are a company that small. All right, let's have a look in terms of what we're expecting tonight. Not a lot. Housing starts, building permits, University of Michigan Consumer Sentiment Index. But of course, as we mentioned, next week here we'll get the RBA board policy meeting minutes and a number of companies reporting, including the likes of A2 Milk, BlueScope, Brambles. We've got Santos. We've also got Lendlease, Iris, Suncorp, and Westpac giving a trading update as well. Now, a big week globally as well, as mentioning with Shane, the Jackson Hole Symposium in Wyoming. You've also got PMI and existing and new home sales out of the US. And then in China, the 1 year and 5 year LPR loan prime rates, which will be very interesting to watch as well. A sixth session of gains on the local market. Let's see where we finished the day's trade. 1.3% gain on the CBO 200. The ASX 200 is tracking higher by 1.2%, 7,960. So we have a very busy week of CEO, CFO interviews next week. I mentioned the likes of Centre Group. We're going to be talking to IAG. So many that my brain is forgetting them all, but you can find them all, of course, streaming ausbiz.com.au from 9:45 a.m. Monday. And if you've missed any of our reporting season chats this week, Koshi spoke to CBA, we spoke to Cochlear, we spoke to Domain, we spoke to Treasury Wine Estates, we spoke to AGL, a lot of companies out there. You can find it all under our reporting season tab on ausbiz.com.au. Have a safe and wonderful weekend.